I will give you a strategy update of Aspo. I will cover basically 6 topics: business strategy, financial ambition, sustainability commitment, our vision for the portfolio, our new leadership model, and then an updated dividend policy. These are basically the topics that we covered in our Capital Markets Day a bit more than a week ago. First, a bit of background. Aspo is a long-term owner of its businesses and an active owner very much focused on sustainability. Each of our companies aim to be a market leader in their sector, and they aim to be forerunners in sustainability. If we look at net sales of Aspo last year, some 536 million euros, and a comparable operating profit of 26.5 million euros. Our 3 businesses, part of Aspo, are ESL Shipping. ESL Shipping is a leading dry bulk sea transport company, very much focused on the Baltic Sea region. Then we have Telko, which is operating in the value chain of plastics, chemicals, and lubricants, basically a part of being a technical trade company. And then we have Leipurin, who serves the food industry and bakeries with basically food ingredients. These are the 3 businesses of Aspo. If we then look at Aspo's way of creating value, the starting point is to maximize the value of the current businesses of Aspo. And that goes both for growth and profitability. So basically pursuing the full business potential of all the businesses. And then secondly, Aspo allocates financial resources to the different businesses depending on their performance. Growth is an integral part of Aspo's strategy. It's a lever to improve profitability, and it also helps us in building a resilient business to economical downturns. And acquisitions are an important part of our growth agenda in addition to pure organic growth. We are long-term owners. The only reason for us to exit the business is that it is low performing, or that somebody else is a better owner for the business. And we are very much open for different structural opportunities, which we have also experienced from over the past couple of years. For example, pooling as a financial instrument or co-ownership structures, which we, for example, for ESL Shipping has implemented during this year. If you then look at what has happened over the past 2.5 years, we basically exited the Russian businesses. That was 100 million euros of net sales of Aspo. We very much focused our growth on the Western markets, primarily Europe, and there's a long list of acquisitions made by Telko over the past 2.5 years in the Baltic countries, in Norway, in Poland, France, Benelux, and last but not least, Svedhandling in Sweden, which we signed just some weeks ago. We have also focused our business portfolio, meaning that we sold some business areas, including Kauko, including Vulganus, and we also sold some real estate in addition to that. And then also what we've done is that we've invested a lot in the green transition, primarily for ESL Shipping. So we invested basically in 12 green coaster vessels of ESL Shipping. If we then look forward, we somewhat adjusted our financial targets. The targets are EBITA of 8%. Previously it was EBIT target of 8%. It's a small difference if you look at historical numbers, but due to the fact that we will make a lot of acquisitions, we see the part of amortization growing up because we want to avoid unnecessary goodwill, instead depreciate value which we allocate to intangible assets. Growth target of at least 5 to 10% per year, and that is really to build resilience when it comes to earnings, avoid any dips in earning development because of an economical downturn. Return of equity target remains unchanged, over 20%. And then we introduce as a new target net debt to EBITDA below 3. Previously we had gearing as a target, but I think this new target is a better KPI in order to manage funding capacity. So these are basically the 4 main financial targets of Aspo. If you look a bit at the past before taking the financial ambition towards the future, you can see from our net sales development, we have a CAGR of approximately 6% for the past 3 years. And it's in particular Leipurin and Telko who has been driving the growth. For ESL Shipping, net sales is not that good KPI because, for example, fuel prices, etc., impacts net sales development. If you look at profitability, basically in 2021 and 2022, we reached or were close to reaching our 8% EBITDA target. And then in 2023, last year, a bit of a dip, particularly because of the soft market of ESL Shipping. And no surprise if we then look at the return on equity returns, we see that 2021, 2022, good returns between 20 and 30%, and then last year a drop, again due to a profitability dip of ESL primarily, and we're down to 12% of return on equity on an Aspo level. How then will we reach the targets going forward? I think the medicine for that is extremely clear strategies of each business and then clear action plans both for growth as well as performance improvement. And I will give a kind of short update on these per business. So basically ESL Shipping very much focusing from a strategic perspective on enabling the Nordic industrials to do the green transition. So basically what we've done is we estimated market growth due to this green transition, and we see that ESL Shipping's market will approximately double over the next 10 years. And that is a tremendous opportunity, and we want to invest in that opportunity via investing in low carbon technologies, new vessels basically. And when it comes to profitability of ESL, we're very much focused on operational efficiency and in addition to develop our commercial competences. If we then look at Telko, Telko's ambition is to become a leading specialty product distributor and expert in Europe. It's a very fragmented market in specialty products, a good organic growth. And we basically want, on the growth agenda, to take part of market consolidation and do a lot of acquisitions. And on the profitability side, we have a commercial agenda to develop our capabilities there, but also a lot of cost savings to be pursued when it comes to the supply chain. And Telko's business model is very scalable, so that means that basically top-line growth should also deliver profitability improvement. Then Leipurin wants to be a leading food ingredients supplier in Northern Europe. We have had some profitability challenges when it comes to Leipurin, and over the past 2 years, we are really on the right track. So already about 3% of EBITA last year. Two ways of reaching this profitability target. One is to invest in growth in such segments which have good profitability opportunities, high gross margin. And secondly, there's a lot to do when it comes to sourcing, supply chain, commercial activities. And for example, we have a lot of improvement actions going on when it comes to Sweden currently. Then if we look forward, we have quite ambitious growth targets, basically doubling Aspo, reaching 1 billion euro of revenue in 2028, and as already stated, an 8% EBITA target. This could be viewed as quite ambitious, but then if you look into a business level, you see that a lot of this has already taken place. So basically a key message is that the current profitability of Aspo does not reflect fully the kind of run rate profitability that we have already achieved. And to view this by businesses, so first ESL Shipping, we have an ambition to reach over 300 million euros of net sales and 14% of EBITA in 2028. And basically the investment in 12 green coasters that I mentioned, that will take us approximately halfway on the growth agenda, leaving then some 60 to 70 million euros of net sales to be achieved by investing in the next wave of most likely green handy vessels, totally fossil-free such. Telko, the story is a bit the same. We want to achieve over 500 million euros of net sales, 8% of EBITA. And the acquisitions that we've done this year, both in France and Benelux, basically Optimal and Green Fluid, and then Swed Handling in Sweden, they will give us an additional run rate net sales of 70 million euros. And in addition, we assume that the next years will give us some 4 to 5% of organic growth, giving us an additional approximately 70 million euros of net sales. Again, taking us halfway, and to close the gap to 500 million euros, we need to make acquisitions that totally represent more than 150 million euros of net sales for Telko going forward, beyond the acquisitions already made. Finally, Leipurin, we have made one acquisition, signed Kebelco, part of Swed Handling, during this year. That will give us 10 million euros of revenue, organic growth of some 20 to 30 million euros, and then acquisitions also maybe in the ballpark of 30 million euros, and that will take us to 200 million euros of net sales, 5% of EBITA by 2028. So this is basically the ingredients to double the size of Aspo and reaching the 8% EBITA. Of course, to achieve this, there are some CapEx investments needed. Our estimate is that it's in the ballpark of 350 to 400 million euros. Approximately half of that will be vessels when it comes to ESL Shipping. And actually, the second half, by far, the biggest item are the acquisitions then of Telko and to some extent Leipurin. And we will finance these CapEx investments then, of course, by good profitability, operating cash flow, debt, and then portfolio development, as we also done in the past. If we then look at the businesses of Aspo, we see some clear differences, particularly between ESL Shipping and the businesses in technical trade, namely Telko and Leipurin. These businesses are different when it comes to kind of positioning in the value chain, opportunities for organic growth, the logic of acquisitions, also how much CapEx are needed, what's the business time span, how you fund a business, and also kind of profitability and return levels. I will not go through all of these in detail, but just as an example, time span of the business, a vessel, basically the lifetime is 25 years. And if you invest in inventory of Telko or Leipurin, it makes basically that inventory lasts for a couple of weeks. ESL Shipping, significant capex investment needed. Telko, Leipurin, actually no capex investments needed beyond possible acquisitions. So quite big differences between the businesses, and that also goes for the ESG agenda, so basically sustainability agenda of the businesses, quite big differences. However, we want to, as Aspo, we want to commit to science-based targets on an Aspo level and for all the businesses. But then if you look at the kind of specific sustainability agendas of the businesses, it's quite different. So ESL Shipping very much focused on an environmental side, on the emissions of the vessels that ESL Shipping is operating. So basically Scope 1 and Scope 2 emissions are of a very kind of crucial area to tackle. Telko and Leipurin, they really need to focus on the entire value chain, both upstreams and downstreams, basically from production to the customer, in order to make a strong influence of the emissions in the industry. And that means basically that they need to manage their product range and manage ESG data that they can provide to all the stakeholders, and via doing that, they can indirectly influence the emissions in the industry. So again, also from an ESG perspective, quite major differences, although they are less than when it comes to kind of social responsibility and governance. Because of these differences, we have a portfolio vision to, before Aspo turns 100 years in 2029, we are forming two separate companies out of Aspo. We have Aspo Infra, and ESL Shipping belongs to that. That's a typical kind of infra company, big capex investments, very heavy balance sheet, a lot of investment in new vessels, and high return on equity and stable profitability. That is what Aspo Infra is looking for. And then if we look at Aspo Compounder, Telko and Leipurin, very light balance sheet, small capex investments in addition to the acquisitions. And due to the light balance sheet, very good returns and strong resilience as well, due to both profitability, margin levels, as well as growth. Then why do we want to do this change? Basically, we see that the strategies and ESG agendas, etc., will further diverge going forward when implementing these strategies. We also want to form a very kind of clear and transparent investment profile of Aspo to the market. And we think it's important to communicate this upfront so that all the actions that we're doing seem logic to the market. And the overriding principle will be to maximize shareholder value. There's a lot of different approaches that we identified which we could kind of implement this portfolio vision, possible demerger, an IPO, sales of one of or several of our businesses. And also when it comes to timing, we don't want to lock up on the timing because depending on the growth investments, timing of those, on financial performance and market conditions, we want to be sure that we maximize shareholder value also from a kind of timing perspective. And the businesses will be very much still focused on the growth and profitability agenda, and Aspo Group will lead this major transformation then of changing the portfolio. Then a short look at the dividend policy, we did a small update here. Previously, we stated that Aspo's goal is to annually increase the amount of dividends, and then going forward, we state that growing dividends are based on a very positive profitability development, and we are aiming to pay up to 50% of net profit as dividend going forward. And we will consider financing needs of growth initiatives of top strategic priority. Finally, the guidance of Aspo, we changed that also from EBIT to EBITA, but it's more of a technical change. So basically, the new guidance is comparable EBITA is expected to exceed 32 million euros this year. And the previously guidance was that it was expected to exceed 30 million euros of EBIT, comparable EBIT this year. And this guidance is basically based on 4 key assumptions. Market conditions will be better this year compared to last year. We will gain some better profitability due to the Green Coaster investments, the new vessels which will gradually come into the picture. Also, we will get benefits from the acquisitions of Telko, and then we have a lot of different development activities going on throughout Aspo, which will generate better profitability as well. This was in brief an introduction to Aspo. Thank you for your interest.